What's up everybody, Michael Silva here to do some technical analysis on the S&P 500. We're going to be looking at the daily time frame and the 30-minute time frame. Going to map out supports, resistance, any trend lines that we see, and then we're going to also follow up on what we discussed on Friday. Today's video is going to be short, sweet, and to the point. Let's get into it. All right, we are back here on the daily time frame. The S&P 500 had an update, not by much, up almost 0.3 percentage points. We closed at 3360, moving more into the bears camp. This red rectangle here is an area of resistance we've been calling the bears camp. It's where the bears hide out, but the bulls are currently inside of it. Below that, we have a green rectangle. That is the bulls camp, an area of support. Bears have not touched this for quite some time. We have a strong level of support down there at 3,200, and the 50-period moving average is sloping up to that 3,200 range. If we get some sort of a pullback to that range, it looks like a great opportunity to buy into the market. We've been saying that this is a buy the dip, sell the rip type of market, but the market just really hasn't wanted to pull back. As you may have heard, this weekend, President Trump signed 4 executive orders around more stimulus around the coronavirus pandemic, which very well might send this market to its all-time high, potentially higher, but we will see as the days play out. I'm sure it's going to be an interesting week of trading. Today's date is August 10th. It's Monday. You know how Tuesdays are. Sometimes Tuesdays are known as turnaround Tuesdays, so we always got to keep an eye out for a potential pullback. Now, where can the market potentially pull back to if not quite 3,200? Well, this purple trend line we mapped out quite some while ago, and as you can see, it acted as support multiple times, and then it acted as resistance here, resistance there, resistance here, and resistance here. So once resistance is broken, it then becomes a support. So I would say if we do get a pullback, it could very well just go back to the entrance of this bears camp, which is 3330, and that's right around that purple trend line. Overall, the market has been in very bullish context. We have had 7 up days here in a row, so quite an aggressive move in the S&P 500, really moving from 3,200 to 3,360 with ease. Now, the last time we've seen movements like this was back here where we just saw some solid up days, but then we saw that big pullback out of nowhere. Or was it? Well, it was an island reversal pattern that we mapped out, and it was also by this trend line, so makes some sense that we might see some sort of a pullback. Obviously, this was a pretty aggressive day that day. We haven't seen this type of day since we've looked back over here in February to the end of March. Is it possible to see a gigantic pullback? It's possible. I just don't see it happening. I feel like if we do get a pullback, people are going to continue to buy into it. That's why we've been saying buy the dip, sell the rip. And this right here, if you entered at 3,200, this very well might be that rip, and you might take some profits right here at the market top. If we get above the market top, well, I would imagine this area would act as some sort of a support. But you'd want to get a couple closes above it. A weekly close above it would be very nice. And then we get eventually a back test of that area where we can see if it acts as a support and we get a continuation to the upside. So what are the bearish things going on in this chart? Well, honestly, not too much from a charting perspective other than we have a nice big area of resistance right up here, the all-time market high. It looks like it wants to go press that 3,400. We have a negative divergence in the MACD, which we pointed out in other videos as well. Let's go ahead and just hop into the 30-minute time frame, map out some supports and resistance to get ready for tomorrow's trading day. All right, we are here on the 30-minute time frame. Today's date, as I stated previously, is August 10th. That's where this blue vertical line is. So every candle from after that point represents 30 minutes of data. Let's go ahead and follow up with how our support and resistance lines acted in today's trading day. So what did we see right out of the gate? Well, we saw some interesting activity right out of the gate. We had a nice gap up, which then turns this area into a level of support. We had 3,350 as an area of resistance because it clearly acted as resistance previously on the chart right here. In the first 30 minutes of trading, we had a nice reversal type looking candle. Long upper wick means that, hey, when it came up to 3,360, our area of resistance, the bears stepped in and pushed the price down. The very next candle, however, the bulls stepped up when the bears continued down to this area of support, 3,350. So it got back tested right here. They pushed all the way up back into the next area of resistance. So it was very choppy this first hour of trading. And then boom, the bears really stepped in, bringing this market from 3,359 all the way down to this 3,337 marker. So very interesting start right out of the gate in the first hour. Clearly, there was some indecision taking place that first hour, and how you would go about trading something like this is very interesting. We saw this on the weekly time frame on the S&P 500 where you had an inverted hammer candle candle, then you had a hammer candle. They just don't go together. It's kind of an indecision of what's taking place. So what you would really do is wait for either a close above the upper part of this wick or close below the lower part of this wick, and you would just play the momentum of either side. Because typically when you see something like this, especially within support and resistance levels that we've already set up, you'll see some sort of dramatic move, and that's exactly what we saw. We saw the dramatic move down to the downside. Now from that point on, we bounced right from this 33.35 level, so that is a nice area of support that we'll be mapping out here once we get through the rest of this. And then from that point, we just saw a nice kind of steady increase throughout the day, still making this area, this 33.60, couldn't quite get above it, so it is technically an area of resistance. So what should we look for heading into tomorrow? I'm going to go ahead and move this resistance up to 33.62. You can call it 33.65 if you want to be more rounded. That's totally fine, but the reason why I want it right here is because the first candle of the day got rejected from that point, and the last 30-minute candle of the day really got rejected there too. Actually, I'd say the last hour, the last two 30-minute candles kind of got rejected within that area. So that is going to be the area of resistance to keep an eye on. As far as past that point, well, we'd have to look back in the history of the chart, but before we do, I want to map out the supports to keep an eye on. One of the supports that I want to keep an eye on is really where this candle bounced from, and that is 33.35. Now, we already have the entrance to the bears camp at 33.30 as a level of support, and that's pretty close to one another. So what we can do is just remove that and see if there's any other particular area. And the particular area that I think would be a good level of support is going to be here. And the reason why I think it's going to be here is because that was just previously resistance. And in technical analysis, once resistance is broken, it then becomes support and vice versa. If the support holds up for a while but then is broken, it then can become a level of resistance. So I'm going to move it up just a little bit, 33.52. You can call it 33.50 if you like. I mean, it makes sense. It's a nice round number, but I'm just doing it right from this point because this candle clearly acted as resistance with this wick, and then you had this candle match up there perfectly too as well. And this one right here basically touched into it. Now on the daily time frame, we talked about 3,200. I don't see the price just dropping to 3,200 right out of the gate, especially without making it through this trend line first. So the areas to pay attention to going into tomorrow are going to be this 33.35 for support, 33.52, and then we have that first level of resistance at 33.61 right here. Let's go back into the history of the chart to see if there's any other level of resistance we can map out. All right, so we are looking back here in February. The level of resistance I want to map out is going to be right here at 33.75. So not too much higher from this previous point, but I want to keep an eye there just because if I look back through the history of the chart, there was resistance, it acted as support, it acted as resistance, and then it kind of went sideways throughout here. It acted as resistance right there as well. So on the 30-minute time frame, 33.75 looks like kind of some overhead resistance. And, you know, the ultimate overhead resistance is going to be that 3,400, the market high. But we want to keep an eye on these levels for potential trade opportunities throughout the week or throughout the next trading day. All right, so there you have it. These are the 4 areas that we want to keep an eye on going into tomorrow. If you guys have any questions, leave them in the comments section below, and I'll do my best to answer them in a timely manner. That is all I have for you on today's S&P 500 technical analysis update. See you on the next one.